Okay, hello traders and welcome to this live webinar on DailyFX. My name is Michael Boutros, currency strategist, and today is Monday, February 23rd. Good to be with you this morning. If I could just get some confirmation, guys, that the audio and video feeds are working, we will jump right in. All right, Petro says AV, good. Thanks for that, Petro. Appreciate it. All right, so we'll go over the featured setups here that we've been following. A lot of interesting talk on the dollar crosses. Obviously, we have Yellen, who's going to be on tap later this week. That's going to take the primary focus on these dollar crosses. Here's what the index looks like to start the week. Since the start of the month, guys, it's been all about this major resistance target, 11,854, 11,880. We've continued to hold that. Right now, the monthly opening range comes right in line with this lower median line parallel for a formation that's been in play since the lows here. And that's the focus for the week. At the end of the day, we're still in that initial range that we set in just the 4 days of trade here, guys, for the month. So if you look at the relative performance today, the greenback's actually performing strong against most of its major counterparts. And again, we'll be looking for a definitive break of this range to really get going. The base case scenario here is you see another possible tag of the highs, another rally here, but the inevitable break of this trend line would give us more of a correctionary stance on some of the majors. And we'll go over those crosses certainly here today. Greetings, Michael, great to see you. John, great to see you as well. Permendra, great to see you. Blondie's in the house. Petro's in the house. Always good to see you. Petro, I did want to take your question here from SB Trade Desk saying, good morning, Michael. I wanted to ask you, is divergence a must on your strategy? Got a European opening range break on sterling yen. Oh, it was a good one. And a trigger. Booked some pips, 50 pips, but don't know if I use the strategy right or if you just got lucky. No, Petro, I actually know exactly the position you're talking about. That was the featured scalp on SB last night. It was a really clean opening range break for Europe. And no, divergence is not a necessity. So it's a great question you bring up, Petro. I'm sure a lot of people have that same question. What's necessary to take the position? Right? So, guys, we talk about sterling yen. We talk about opening range breaks for the session. We talk about momentum triggers. We talk about divergences. These are all tools that work together to give you an effective signal. Okay, you can't omit a trade based on one. Okay, and if there is not one missing, it doesn't invalidate anything. The more of those that work in congruence together, the stronger the affirmation for the trade is. Petro, right? So on that position that you took, if you had divergence on top of those signals that you got, well, that's maybe a trade. I'll double down the leverage or I'll increase the overall exposure. Let's say you didn't have all that much conviction on it because you didn't get the divergence or the trigger break was missing. Well, then that's just a function of how large the trade size is. But Petro, the setup was there 100%. You played it extremely well. So here's the setup that we've been following on SB Trade Desk. That Petro was in earlier today. He took a short with a break of the European opening range. So here's what the European opening range looks like, guys. You can always get an add-on app, by the way, to MarketScope. Called Trade Sessions. Sorry about that. A little bit of a delay here. My computer's a little lag. And this will highlight, guys, the highs and low for each session. Now, it's not going to highlight the opening range. It's just for you to be able to graphically identify where the open is. So, excuse me. Obviously, it's going to work a lot stronger, guys, and be a lot more profound as far as the 5-minute charts and the smaller granular charts that you're looking at. But certainly, here's the London Open. Excuse me. And if you bring it to a 5-minute, okay, here's what Petro was looking at earlier today. So here's the green London Open. There's your London Open candle, okay? Typically, when we're talking about quick opening range break lesson, guys, for those of you on SB, there is a opening range piece there that's available right now that with a quick breakdown of the strategy. But you're looking at the first hour hour and a half of each trade session. So for the U.S., I like to boot it up from the futures markets open, so from the 8:30 to 9:30 open of cash markets. Sometimes that opening range will go into 10 o'clock. For here in New York, as it pertains to London, you're typically looking at the 3 to 4 o'clock span, 3 to 4:30. And again, we're not stressing, guys, time as much as we are stressing price. Meaning, you're looking for the market to set a near-term high or low early in the session, okay? That could come in the first 20 minutes, and then we can sit in that range for, dead on an hour. Or the range could be super tight, and it just starts to expand into the end of the hour. The point being is you're looking for a definitive high or low or a test of either of those. So here's the London Open. You drifted, next hour you tested, or the next couple of minutes you tested that high. You drifted to this low, dribble here a little bit. This is only an hour and a half into the Open, but the definitive break came right here. Okay, about 5 o'clock, 5:20, you saw a break of that London opening range. That gave you a downside bias against the highs, okay? Looking for about 47.50 pips. It just squeezed out. Literally, I think it was like 56 pips on the decline here. So, Petro, you played that to the T. Well done. Jonas is in the house, my man. Great to see you. Mark from Indiana, good to see you here as well. Guest wants to look at those two pairs. We'll definitely take a look at that. 100%. Let's just get through these setups real quick, guys, and we'll go through all of your questions. Mark, great to see you as well. So does that make sense, Petro? Well played. Well played. So to take it back to the 30-minute again, just to give you guys a view of where we are right now in this setup, here's what the daily looked like last night, and this is what we posted last week on DailyFX. Actually, I put a piece on this pair as well. So the basic focus here, guys, is 183.96 into the 184.25 region right here. You have the R1 monthly pivot. You have a 50% retracement. This is long dated, I think from the 2007 highs. You have the 618 retracement just from the decline off the December highs. Okay, and then I'll show you, obviously, in the near-term chart, you have a nice structural formation here too. But the basic premise is that the longs are at risk below this region. Inevitably, longer term, I do like the pair higher. Okay, sterling yen last 2 years running has been my trade of the year. I still think you get some upside thrust. And aside from the broader technical picture on this pair, if we look at the weekly charts, for example, here. Okay. We started off the year, for those of you who are on the mailing list for DailyFX for the quarterly forecasts, or the yearly forecasts rather, we started the year looking to buy a pullback in sterling yen. And that was based on the premise that you had come into a major area of resistance. You had the median line here off the 2009 lows. This is a 50% retracement from that decline off 2007. You had a 1618 extension from the ascent off the lows that you made again in 2009. There was a lot up here, okay? And obviously, we probed just above that before last year ran out. So we were looking to buy the pullback. You had a nice 52-week moving average here, a basic trendline support from 2012. Gave us a nice outside weekly candle reversal. All right. So that shifted the bias back up to the upside, and now we're starting the year, or now we're going into the end of the month, the same as we started the year, right up against this major key resistance. Now on the weekly chart here, that extends all the way up into 188, and I don't want you to stress that too much, but the premise being we are playing with a broader upside bias here for the pound yen, and there needs to be a major shift for us to invalidate that longer term approach. That being said, we have been playing shorts off of the 84 handle. Okay, so that's really the focus for us right now. Here's again what the intraday chart looks like. Oops. There we go. Let's get rid of this. All right, so here's how last week panned out. You actually had an opening range break on Tuesday for the week, came right into that major key resistance. Again, the 618, 84.26 is the upside extreme. Before, momentum just completely turned over. You got a trigger break, you got a break sub 60. This thing came right back into the opening range high. That held all the way into Friday. Again, The break there on the GDP showed us another decline right into the opening range low, which held. So last week's was sort of a null. The only opening range play that you had was this long here, and then maintaining the upside bias while above 83.20. Okay, so you got a couple of long, long opportunities. Long story short, we'll wait for the opening range here to set forth here, but broadly below the 184 handle, looking to sell rallies. And in fact, yesterday on SB, I don't know if you caught this one, Petro, as well, but you opened the week already with a bearish tone for the sterling yen, okay, on account of a couple of different things. This break that you saw here on Friday that took you back below the opening range high not only invalidated the long side, but that was the first 40 break in momentum that you saw since Monday. So right off the bat, on the upswing, after this 40 break, you're looking for resistance where? At 60. And here you are, opening the week with RSI sub 60 on that rally into the open of Europe. Again, 60 holds, trigger break, puts you on the short side. Now, interestingly enough, and here's the caveat, on the way down, we found support at 40. So now for me, that puts into focus more right now the weekly opening range. Okay, so if you get a stretch into this region, that'd be really sweet. If the opening range high is just below that region, you have a very clean invalidation. If it gives out, you know exactly what we're looking for, 185, 186.34. But at the end of the day, longs below 184 here are at risk. All right. Any questions on sterling yen? It's still one of my favorite setups here. In fact, on SB, we have all the sterling crosses highlighted this week, guys. So if you haven't taken a look, I encourage you to do that. Other than that, we will get a quick review here of those. Good afternoon. Guest is saying, Petra, you're more than welcome. Hello, Michael. If you have time, can you take a look at dollar CAD for Blondie oil? Yeah, for sure. For sure. Let me just get through some of these sterling crosses because I think they're really interesting. So again, look to see what happens on this upswing here. If momentum holds 60 and you get another downside trigger, we'd like to take another short in the position. You really do need to see a break below the lower median line parallel to get this thing going. At the end of the day, here's the structure of the formation that we're in. It's actually pretty darn clean. Okay? So just keep that in mind here if you're involved in the sterling yen. Bippin says, your 2015 trades. Yeah, so Bippin, on DailyFX, you'll see 2014, 2015. Every year we do the trades of the year, and they're published in January. So those were published last month. You can find them on dailyfx.com. All right. Moving right along, the good old British pound. Before we go into sterling key, which is, I think, another scenario where I'm actually looking higher in the pound, here's what the pound dollar looks like to start the week. Before we even jump into this, I do want to take a quick moment to show you the pound dollar on the weekly basis. And again, some people are probably asking, well, if we're scalping, why do we look at weekly charts? Guys, it's absolutely paramount to have a broader picture of what the entire market's doing on the broader scale. If your focus is solely in 5-minute charts, solely in 30-minute charts, you can really do yourself a disservice because you're going to miss those larger scale pictures, major longer-term resistance and support levels. So that's all to say, we like to work at the top-down approach so we have a broader view of where we are in the larger encompassing trend. That being said, the rally that we ran into last week, specifically right towards the end of the week there, 154.79, that's a basic 236 retracement from the decline off last year's high. Okay? Just above that is an absolute critical resistance region, which is why, broadly speaking, you're starting to look for a little bit more of the sterling rally to fizzle out here near term. I'll bring your attention to this, first of all, is the median line parallel formation that we were working with off of the 2008 lows, if I'm not mistaken. Nope, 2009. And that break here, late last year, was a major support break. It basically was 155 region to the downside there. If you take a parallel off this slope, so here's the next, this is the current formation or the operative formation that we're in right here, this pitchfork. Again, that region, the median line off the high, highlighted that same support region on this ascending pitchfork. And if you take a parallel off that same slope, you can see that region between both of these, the blue and that orange line, has been pretty critical for price. Look how many inflections you saw there. Right? Consolidation. break, consolidation, break. So this is the region of focus if you make it through 154.80. Okay, and this is what, in my mind, I would deem as a near-term or a medium-term bearish invalidation. Meaning, if we get back through this, as we've seen over the last 3 years, 4 years, you're likely to get some serious play. So again, as you get into this region, broadly speaking, just to bring things in picture here, you're looking for some sort of resistance, some sort of high to come into play. Add to that, the momentum signature for the British pound on a weekly basis is as bearish as it has been in the last 6 years, dude. Here's the last time we were back this bearish in momentum. Okay, and again, remember, things can stay oversold, overbought for indefinite time periods. So the entire time you were down here, the market was tanking. Okay, so just keep things in perspective. On the upswing here, we'll see if 40 holds resistance, 50 holds resistance. That's also a bearish development. If price gets into that region with a hold there, that's even more conviction. So that's the sterling on the weekly basis. Zoom into the daily charts. Here's what pound looks like on the day. Okay, so within the ascent, first of all, there's a basic trendline support here from the 2009 lows that you see here in orange. The gap from the open of the year, and then those previous weekly highs that we made. This break that took us above this highlighted region here is what invalidated or validated the long side bias, rather. That coming in, again, 147.78 is that key resistance. Near term, you're right up against support. Okay, you have that median line off the lows. Again, that 78.6 extension to 53.20. I do want to get you the reference points here, guys, so I hope my computer doesn't freeze. This is from the 2013 lows. And momentum is at support. Support trigger pending right there. So you start off the week at a very interesting prospect here for the sterling. I do think if you get below this region, you play the correction back into the lower median line parallel. That takes you, somewhere in the range of 52. And the turn ahead of 60 with a trigger break is very, very encouraging. It's exactly what you want to see in a near-term correction within a broader downtrend. So sterling on the 30-minute looks like this. All right, very similar to the sterling yen in that last week's opening range didn't really give us much plays. In fact, the opening range for the sterling yen was actually even cleaner than this one here on the pound dollar. That being said, as we noted yesterday in SB, we're starting the week with a bearish tone, looking to sell rallies, looking for downside triggers and momentum. I did delete this one earlier today. There was this trigger. I don't really like to use these triggers, guys, that travel over the weekend. There was a trigger in early Asia trade there. Really tight stop, would have worked inevitably to get you the 30 pips. But we're really looking for fresh triggers here as we put in the opening range for the week. So again, you open up the week right at key support. I'm sorry, guys. There's such a lag here. Not sure what the deal is. Okay. So, very similar that we did on that weekly chart for the British pound. Here's your extension, or here's your Angel's Pitchfork, median line parallel construct, whatever you want to call it, off the January lows. If you take a parallel of that to that low that you made there in early January, you can see that this region has been major inflection as well. And look what happened there in overnight trade last night. No, I guess this is this morning here. Okay. Real nice dip into that region. Perfect trigger break to the upside. Holding longs, looking for about 29 pips per scalp. Near-term resistance 154.39. 154.80, 154.70 is going to be our bearish invalidation level. Meaning, as long as price stays below this region, guys, we're going to want to sell. We're going to look to sell rallies. We're going to look for trigger breaks, support trigger breaks, and momentum to get on the short side, looking for about 30 pips per scalp. Questions on the pound. So you can see the pound crosses, guys, are just starting the week in real nice form. Real nice form. The levels are super clean here. So on a move like this, guys, now you've made sort of a stretch off of that key support that we noted last night. Just tack on a quick retracement. Look at that 50%. Look at that 618, 154.22, 154 initial targets here on the upswing. All right, so that is the British pound. We'll update this one tomorrow in the webinar. Hopefully, we'll have a little bit more of a clear-cut opening range as we start to set the week. But levels have been super clean here on the pound. Last but not least, I do want to go over the sterling key setup, gold, and then we'll jump into your questions, guys. So you have any pairs that you're looking at, crosses you want to look at, strategy questions, now's the time to throw those out. So here's a real quick overlook of the pound Kiwi from last night's report. Just wanted to point out the major focus last week and the focus heading into this week is exactly the same. That's that 203 barrier. Okay, it's absolutely paramount, guys. You have the lower median line parallel from November. This is a long-dated retracement. You have the 38.2 retracement of that advance, and 203.22 ends up being the January high day close. All right, so all of this is kind of stacked up right around 203. It's 202.88 into 203.20. Remember, guys, this is a huge ATR, so we're not going to split hairs here if the range is 20 or 30 pips large. You're looking for about, per scalp, you're looking for like 60 pips on this one. So just to keep things in perspective on where we are, we've been playing, since last week's dip into this region, we've been playing the rebound off this. The broader trade is constructive. The momentum signature looks pretty healthy. We were playing the downswing here into the opening range lows for the month, which, remember, is right above that level. And we've been playing the upswing ever since. So here's what sterling key looks like. I think this one, if you're going to play any of the other two trades that we talked about, guys, sterling dollar, a possible breakdown lower, or sterling yen, a possible breakdown lower, this would be a good way to hedge your exposure and being able to take a little bit of a shot on a sterling long position. Now, we'll effectively want to see the Kiwi either hold or turn over versus the dollar. But that being said, here's what the focus has been for sterling key. This is a construct I added last night, guys, on SB. It actually turns out to be the operative one. You saw that low there, almost confluence dead on. Nice rebound right off that region. So this is now also fulfilling the small gap that we made on the Sunday Open. And now if we really do launch off this, you have a pretty clear-cut initial weekly opening range right at support. Okay, so basically your bullish invalidation level gets moved to today's low. If this low is respected as we head into U.S. trade, guys, you stay constructive above basically 204. Okay, now inevitably, I do want to just zoom out real quick and show you the construct that we're in that we need to get out of to really, full conviction on the long side, and that would be this median line formation here. All right, so call it what you want. It's right in line with the weekly opening range high right now, which comes in at 205.20. We'll extend into 205.50 here, which is a basic 38.2 from the highs. But this, for me, is what would be the bearish invalidation level. Okay, and a break above this really gives you full affirmation for playing the long side. Looking for 206.70, looking for the basic trendline resistance off the yearly high. So a little bit of a different feel from sterling key and sterling yen, but nonetheless just as clean. All right, questions on sterling key before we move on. So if you're in a position like this, if you've already taken the long, you saw that 40 hold in momentum, if we bring this into a 5-minute chart, there was actually a decent trigger to put you on that long side. Let me just show you what that looked like. That was this trigger. Remember, when you're taking these momentum triggers, a lot of times it's better to take the high in price as opposed to the high in momentum. Meaning, instead of taking this high for the trigger, a lot of times it's better to take the high in price. So the high that's made in price, we'll take that peak in momentum. to draw our trigger. It just so happened that this trigger right here specifically came right at the 40 level. So remember, your 40 acts as resistance when you're in a real strong downtrend to begin with. So when it converges with a trigger, those are typically really strong plays. That was also... I stand corrected. But in any event, that would have been your trigger to the long side against the lows. Again, you're looking for about 64 pips per scalp here, so keep that in mind. Guys, even if you still think the room has trade, we always want to be doing something at our targeted ATR. Okay? Whether it's taking a quarter to trade off, move the stops to break even, some level of prudence is needed when you're trading such short-term levels as we are in this strategy. So always keep that in mind. Jonas saying Sterling CAD's taken off. Let's go ahead and take a quick peek at that. I actually haven't checked that out this week yet. Okay, so here's your weekly open. Okay, this retracement's null and void. Let's do this on the fly real quick here for Jonas. Looks pretty good, man. Actually, I think on this one, you really do need to refer to the daily chart. I remember we were following this one for a while as well. You know, that's the major breakout that we were talking about. I honestly don't really have many levels beyond here until the upper median line parallel, which right now lines up right around 196.25. The 2006, believe it or not, the lows come in at 197.50. But... extended range play. I would still, Jonas, rather play the sterling key or the sterling yen, to be quite frank with you. I'm not too keen on the CAD. Swing trades on SB Trade Desk just ripped up a nice CAD long, actually. Really, really nice position. From a scalping standpoint, it's just not really my cup of tea right now. So, Jonas, same problem I have. Or let me backtrack. I'd still rather prefer playing the sterling key and the sterling yen versus this. On a sterling long, though, Jonas, longer term, yeah, I mean, this is a no-brainer, right? Wouldn't necessarily scalp it. This is a trade I'd be interested in holding for a little bit longer of a duration, a little bit more of a long and play type hold. All right, Cole with a good question here, saying, when you look at the opening range for the New York session, do you look at the 8 a.m. candlestick on a 1-hour chart or a different candle on a different time frame? So, Cole, the time frame doesn't matter, right? You're looking at the highs or lows the market is making during a given time period. I can tell you that I'm not looking at an hourly chart because typically the opening range is the first hour. So it doesn't tell you anything to look at one candle, right? When I'm looking to take these positions, what trade were we just looking at? I don't know, sterling yen. You want to look at that on a 5-minute chart, to be quite frank with you. I mean, you can do it on a 30-minute basis, but you want to just keep it as clear as possible. Why complicate things, right? You want to see as much information as possible. So right here, here's the initial New York opening range. Okay. I like to look at it, again, like I said, from about 8:30, 9:30 when the futures markets come online. But in any event, you're looking for that high or low to be set within the first hour, hour and a half of trade. Then you're looking for a break of that range. Guys, opening ranges, my friends, are not a candlestick strategy. I can do opening ranges with line charts. I can do opening ranges with bar charts. I can do opening ranges with tick charts, right? So it doesn't. I don't want you to stress necessarily the candle or the time frame for that matter. Whatever is readily identifiable and easy for you to see. For me, I always just standardize down to a 5-minute chart when I want to check out the opening range for the session. For the week, typically looking at a 30-minute. For the month, typically looking at a daily. Cole, does that help? Does that make sense? Good question, though. All right. So quick crash course there on the opening ranges. Okay, so I do want to take a segue real quick and answer some of those questions that were coming in before. Chris wants to look at dollar CAD. Someone else wants to look at take a CAD here. Oh, Blondie. We'll take a look at dollar CAD for you. And oil, too, for sure. Yeah, we actually put out an oil chart last week, which Got a lot of attention this weekend because it's still in play. But in any event, here's what the dollar CAD chart looks like on the daily first, and then we'll move it into the to the scalp. So this is sort of the slope I was playing with last week. Look, at the end of the day, I don't want to stress this even as a break, because for me, guys, I try to stay as disciplined as I can to the strategy that best suits my type of trading. And right now, the monthly opening range hasn't even given out yet. On a trade like dollar CAD, where the opening ranges have been exquisite, okay, here's the opening range for July. That broke definitively on the 11th. You close at the highs. August, opening range, never broke. The opening range for September, that broke later in the month right here towards the end on the 24th. You closed at the highs. Opening range in October broke on the 14th. You closed near the highs. You never set an opening range for November. You spent the entire month in that first range. Opening range for December broke on the 8th. That closed at the highs. Opening range for January broke on the 20th. That closed at the highs. Do you know what I'm saying? So in a pair like this, I don't make broader claims until we finally clear that initial week and a half stretch to open up the month. And right now we're still in it. So despite whatever type of formation I want to work with, call it a breakout or not, objectively looking at price, we haven't done anything. In fact, for this to be a near-term sort of correction, get it out, wash it, and done, I would really want to see it drop into 2250, 2280, this region right here. Nice confluence region here with 236 off the July low. This is a longer dated 786 off the highs from 2008, 9. And then you have 100% extension from the decline off the highs here. So this would have been a region I would have been very interested in getting back on the long side. That being said, I just don't have a play here, guys, and that's okay. I guess a lot of people are looking at wedge, triangle, whatever you want to call this, even if, what do you do with this? I would still want to see a break of the monthly opening range high to validate that breakout. So, again, I'm not just trying to shoot down all you guys the dollar CAD trades. I just humbly I don't have a position here or a trade bias here that's compelling enough for me to work with. It will be a beautiful trade. I think the top side swing here is going to be obviously we're going to want to play in the longer term for guys who are medium to longer term traders, but right now, from a scalping standpoint, it's just not on the menu for me. For your consideration, here is what the 30-minute chart looks like. The levels actually looked all right for a couple of days last week when we broke the opening range for the week. This happened on Thursday, and we did get an upswing right into the region of resistance we were looking for. This is the Andrews pitchfork that you're looking at in that daily chart. And this was a confluence resistance 618 retracement of the decline. Gave us an objective range here that worked out almost to the pip, but that was it, and that was a news-driven spike to the upside here. So I don't know, guys. I really don't have a strong opinion on dollar CAD. If you are compelled to trade it, these are the levels I would be looking for. They have been pretty clean. Near-term resistance 26.25. A break of the upside, you're looking for the February highs, you're looking for that swing high at 27, basically just ahead of it. Near-term support, I would have the weekly opening range low, followed by right there at 25.20. And then, if we do make a turn, if you get a compelling trigger and break in momentum, tack on a quick retracement here, and we'll see what the downside targets are on such a scenario. But Jonas, same reason why I'm not really crazy about playing dollar CAD or sterling CAD. Yeah, I do like the broader upside. If you're someone who's trading longer term, the upside is where you want to be from a scalping standpoint. I just feel like it'd be chasing it down here until I get validation that the dollar CAD breakout is legit. Do you know what I mean? Cole says yes, very clear. Thank you, Cole. I appreciate that. Bipin says this recorded. Yes, this will be recorded and archived, my friends. Since we only do one a week now, I do archive these for you, and they will be available on DailyFX and SB for that matter. Okay, so guests, we went over sterling yen. I guess it's only prudent that we go over dollar yen as well. Here's what dollar yen looks like. It's sort of still an abomination trade for me. It's still very similar to what we're looking at with dollar CAD. Just not interesting enough for me. Just not interesting enough for me. Here's the February open. You made a stretch. You're sitting there. This is Chop City. In fact, the short off of 120 was the only thing that on SB, on the scalp side at least, we were trading. And that was just because of this rally right here. We've since removed the formation, but that was a nice decline. Last week was, a wash. A trade like this, I still feel like there's some wickedness brewing before it starts to make, the broader trade comes into focus, which is obviously weighted to the upside here. And guys, don't ever let yourself lose sight of the fact that the dollar index, right? Remember, this is going to be huge this week, especially if it doesn't break ahead of Yellen. A downside break, you have a room to the downside. The index has not seen a decent correction of anything more than a 236 retracement in over 5 months. So certainly, it would be a welcomed pullback. It would be a welcome pullback. At the end of the day, you have a momentum trigger here to the upside. If it gives out, you're looking back for a tag of the median line. At the end of the day, if you see price break the opening range low for the month, break the lower median line parallel, like I said, a scenario like that, you could see dollar yen wash out pretty quick, right into 116. Or even 115.50, and this is like a golden region where you'd want to start looking long again. But even on the upswing, everyone thought this was the resumption of the broader trade. Oh, the 2-month triangle broke. Look where momentum found resistance. Right at 60. Right? And in a strong uptrend, that's not what you want to see. Okay? So some food for thought there on dollar yen. Again, I think pairs that will become, will come back into focus much clearer in the next couple of weeks. But for me personally, at this juncture right here, I just don't have a scalp setup for it. All right. John says there's no sound. Guys, are we still good on sound? If I could just get a quick check. Okay, thanks for that, Petro. Appreciate it. Oops. Mike, Brian, Tom, thanks. All right, so that is dollar yen and dollar CAD. Blondie, you want to take a look at, thanks for that, Blondie. I want to take a look at also at crude. So let's take a quick segue at the COM block. Well, for those of you who have been following gold with us, what can I say? This is textbook chop material. The bearish or the bullish invalidation level coming into this week, guys. If you read the weekly forecast, or if you're on SB, was 1195, 1198, 1196, 1198 was the actual quoted region. I'll need to see that on a closed basis, but this is huge. Momentum still hasn't broken below 40. Price, you got basic trendline support. You have the former upper median line parallel. You have the 1618 extension from the decline off the highs. And you have the 618 retracement from the ascent off the lows. All stacked up here. Now, to be fair, the trade turned super bearish with the break below 1250. This is where we got bearish on the broader weekly scales. Okay, it was back below the 200-day moving average. You see here in green. It was a break of the initial weekly monthly opening range, and it took you back below the high day closes for October. So that put us on a bearish tone, heading into a late February low. I think you're getting it. I don't want to be the one calling the low here, guys. I'm not going to be as foolish as just to jump blindly into a long. But this is, if we were going to see some sort of near-term recovery in gold, this is where you'd want to see it. Let's just say that. So we'll see what today's close is. If we close above 1196, 1198, again, that puts all shorts at risk still. If we close below, we'll be looking for a continuation to 1171, inevitably 1151. But I do really want to highlight how critical of a region of support that is right there, guys. And as long as price action stays above that, you do not want to be in any fresh short exposure. All right. Now for this trade, the trigger I think is going to be beautiful. Okay. Objectively, the opening range broke for the month. You got a slow drift into the end of the month here. You only got a couple of days of February left. Sounds good. The trigger break would be a move back below this low that we made here today and a momentum break sub 40. That would open up a decline into 1170. A trigger break to the upside, okay, with a push and close back above 1206. Has you looking for 1218, 1220. This is the major key resistance near term. And this, my friends, is the bearish invalidation level. Meaning if we get through that, you look for 1239, you look for 1248. All right, so you're starting off the week here with gold at a major key support. Watch today's close, 1196, 1198 in focus. So with that in mind, Blondie on gold. Here is also a quick look at what silver is doing. I saw someone ask about that. Where are they? Where are they? Silver, silver, silver. Right. So let's do a quick update on this guy. Yeah, very similar in that the momentum signature, right? Really just barely holding 40. You have a resistance trigger pending, and you have price at support. Yeah, it's a very, very similar setup. Very similar setup. I just want to see something real quick, guys. Yeah, that could be in play too. Something like that could be in play too. And you have this lower, or the median line right off the high. Resistance, 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 break, support on the slope on the way down. Mirrors and adds validation for a break above this region here to get you back on the constructive near-term rebound type of play here for silver. So this is sort of the near-term resistance region I'd be focused on right here. Blondie, does that help? On silver. That's going to be your bearish invalidation level. Crude. Here's what it looks like on the picture here with crude. I got you. It's been actually pretty clear. So here's the 2-hour chart, and this was the low that decline caught last week. So here's your open for the week. Okay. Well, before I jump into this chart, guys, just peep the daily real quick. Ready? You're trading in the monthly opening range. You're trading in the monthly opening range. You're trading in the monthly opening range. It was set in the first couple of days of trade. The entire month of February, the entire month has been 47.54. Period. End of conversation. Exclamation point. So any intraday trading that you're playing, any intra-week trading that you're doing, any scalping that you're doing doesn't target anything above 54 or below 47. Period. End of conversation, guys. Until that range breaks, as near-term traders, our focus is on that simple opening range. Plain and simple. So with that knowledge in your head, you know exactly what you're looking for. Look at these triggers. They've been ridiculous. They've been ridiculously clear. So here's your February open. There's the low. Was at a nice key confluence support, 47 to 47.70 for those of you on SB. If you guys remember, that was major area of support that we highlighted early in the year. You did get a lot of dribble below it into 44, 43.50 before the rebound, but It was a huge region, huge pivot region. And again, that is now the opening range low for the month. The opening range high, very simple, 786 retracement confluence with the 618 off the low. Gave us just ahead of 54. And we've been playing in that range all month long. This is a 2-hour chart, by the way. This is your February open. So I'm just going to put the February open right at the start of the screen here. All right, guys, that's a condition you don't want to just ignore. And at the same time, when you're playing inside that range and the levels are so clearly identified, you're just looking for momentum triggers. That's all you're doing. Okay, there was a nice momentum trigger here. I've removed since with that break. That puts you long. You're looking for 53, 54. Boom. There was a hold at 60 here. Okay, and a momentum trigger on the near term that broke to the downside. You're short. You're looking for the opening range low, 47, 47, 70. But wait a minute. Within this is a nice median line formation. And you can see that every consecutive low got higher. Which is why as we head into the close of week last week on the reversal here, as this thing again held for a third time, this run into 54, we said, hey, on the way down, watch at 50, just take off here, because now you're coming into a confluence of a 38.2 and the median line. You got to dribble just below south side of that before the rebound higher. Now, to open up the week, inevitably, it did break, right? It did break. But what didn't? Still, the February opening range. Okay? So, it is a bearish momentum signature. Still, this was the momentum trigger that got you off of the shorts as it came into that highlighted support region we were talking about. As it stands now, this is the trigger I'm looking for to get me back on the long side or take me out of the shorts. And major key support, again, 47 into 47.70. Blondie, does that help on crude? Any questions on this, guys? The levels have been just, it's ridiculous. It's ridiculous. So enjoy it while it lasts. The market for crude remains 47.70 into 54. We'll play that range as much and as often as we can. All right. Running a little bit short on time here, guys, so I'm going to try to whiz through some more of your questions. I see some great pairs out here I do want to review, so bear with me one moment. Makibi, A. Caroline, great to see you. Let me ask you a question. I'm not sure what your question here is geared towards. How can I be able to tell that the rate will rise or fall? Are you talking about interest rates? Or is this just a leftover question from last session? If you're in the room, let me know what you mean by that. On that front, Bippin went over Sterling. Swiss, where do they stand? Hey, listen, I don't really cover Swissy. I don't really trade Swissy. I think the Swiss dollar trade ever since the Euro Swiss peg broke. I don't really interested in dollar Swiss. Obviously, we never played Euro Swiss, but the only thing I'll point out is this, guys. Real near term. This is just something that Jamie eyed out. Guy's got a beautiful eye for these weird pairs sometimes. But here's what the dollar Swiss formation looks like. That's all I'll say on this one. It's not really something I'm interested in, on any count, really. Basically, that's all you need to know for dollar Swiss there. You're butting up against the 618 from the initial break on the 15th there. That gives you 94, 98, basically 95 handle as resistance. The upper median line parallel also coincides on that pretty much all week, right into the close. So take it for what it's worth. Long's at risk, sub 95.50 here for dollar Swiss. Mark from Indiana wants to look at Euro Pound. I actually haven't even seen a chart of that in a couple of days. Yeah, actually, let me ask you, Mark, what are you trying to do with this? Listen, from a fundamental standpoint, it's bearish. Okay, if you look, there's no other way to be but bearish. Europe is just embarking on further quantitative easing. The Bank of England, in my personal humble view, I think is amongst the most hawkish central banks out there, if I might be so dare to say so. So from a fundamental standpoint, yeah, I perfectly see it. Technicals I just don't see a reason, guys, to sit here and try to scalp a pair that has a 69 pip ATR when we're looking at Kiwi Sterling Key with like 260. It's just, you know, you got to pick and choose where your battles are. For me, it's just not, Mark. It's just not something I'm interested in. Yeah, he says short. I'm with you. Broader directional bias is definitely short. You know, but I don't have anything to say on this one, Mark. Sorry, buddy. I wish I had some more input for you. Guess saying, I remember you were saying a paper trade on Swiss. I guess you proved your long-term point. Yeah. I'm not going to go into, you know, we're not going to get started on that conversation. But yeah, on a demo, guys, when the peg first went into play, I was such a hater on it from the start that I did take a long position here a couple of years ago on this demo just to prove a point. The max that the trade got, 1,000 pips. The drawdown now, you're still looking at down 1,200. So, yeah, hindsight's 2020, but it was never something that we were engaged in. So, thank goodness for that. More information here. Mark, I don't want you necessarily to get out. Says, okay, I'll get out. I don't necessarily tell you to get out, but man, I mean, what are you trying to do with it? If you're looking longer term and you're willing to hold, a possible test of 74.50, sure. I mean, I think you can squeeze out 70 out of this at some point in the next couple of months, but I don't have a setup. Guys, the setup needs to be there. It's not just about knowing the directional bias. I think we're both on the same page, me and you, Mark, on this one being bearish. Longer term, on a near-term prospect, scalping, there's just not enough price action here to give me a play. Yeah, Chris, I'm sorry about that. There's they're doing some construction in the office next door. I do apologize about that thumping you might be hearing. Okay. Blondie, you're more than welcome. Dimitri wants to look at Sterling Oz. Sterling Oz. Well, let's do this, Dimitri. We haven't looked at Aussie dollar yet. I just want to highlight one quick thing with this. We spoke earlier in the session today a lot about opening ranges and where, we are. Guest, yes, this will be archived when we're done here, so don't worry about that. But another example of just like the dollar index, flip it upside down. Dollar index, opening range low, opening range high. We're at the lows. Flip it upside down. There's Aussie dollar. Opening range low, opening range high, testing the highs at trendline resistance, former support. Okay, so for me, I still look for a stretch into like 79.40. Is it? Yeah, this region here, huge confluence of fibs. If we break through the median line here, that would be the play. From 78.50 right into this 79.40 region, and this would be a little bit more of a critical resistance. But keep in mind, again, objective, right? We always want to make sure that when we're looking to ascertain bias, the features, the technical factors that we're looking at are, objective. And that's why I like using opening ranges and price ranges in general, because that's exactly what it is. It's objective. The objective right here is resistance at 78, just ahead of 78.75, basically, for the opening range for the week. So here's what Aussie looks like, rather, on the near term. Here's the 30-minute. If you noticed, guys, for this week on SB, I don't have this as a featured setup anymore. I think you're getting into an area here which is you're going to see a little bit more chop, and I'm not really happy with the way that we broke off that last median line there at the end of the week. So I'm kind of going to sit this one out. I still do think you do get a broader recovery near-term higher. It's just that the momentum signature wasn't there. In fact, to start the week, guys, momentum came right into 60 and held. And in fact, we got a 40 break in overnight. So right off the bat, you're not really super constructive. And again, you'd need to see a trigger break there. You'd need to see an opening range break to the upside to get me on the longs. Till we do, I'm neutral. I'm flat here, guys, as a disclaimer. But base case scenarios, you do start to look for an opening range break to the upside for the week. My humble opinion. Hey, Cole, I appreciate that, man. One thing he's going to take away from today, he's going to have a quote of the day. Cole says, it's all about the setup, not just knowing the directional bias. And really, that's especially when we're near-term trading, Cole. Especially when you can't even imagine, and this is just from being on the desk for years, guys. You can't even imagine when you're scalping, and I'm scalping the long side of the trade, and I look at the end of the day, and you're down on the session when the market is up like 200 pips. Right? Well, what the heck? I've been buying. Why am I losing? Because it's not just knowing the directional bias. It's all about the setup. If you don't have an entry, if you don't have a proper conviction stop, you're just chasing. And there's no difference between you and the retail trader who's just out there, chasing the market, which is not what we want to do. Okay, so I think I've gone through most of your questions. Aussie dollar, Jake. There's Aussie dollar. I missed your question earlier, but it's right here. Gold, Michael. We took a look at gold too, and silver. So I hope you got that. And crude, euro, pound. We got the rest. All right. So we'll wrap it up there. One thing I do just want to quickly note, guys, is that you do have Yellen coming into focus as you head deeper into the week. That's going to be big. Looking at the UK and the sterling crosses, the sterling dollar, sterling yen, sterling key that we covered earlier today. Hell, even for the euro pound, for you there, Mark, is you have Carney, who's going to be on the tap on Wednesday with a speech, and then obviously as you head deeper into the week, you're going to get those GDP figures, and we'll be very, very interested to see how the sterling reacts, specifically with some of those broader crosses at key support and resistance as we start off the week. Guys, I'll have this archived for you and up on SB in a couple of hours. Till then, best of luck trading. I will see you tomorrow morning, bright and early, 8:30 Eastern on SB Trade Desk for the next scalp webinar this week. Best of luck trading, guys. See you tomorrow. Cheers.